Hey, it's Michael Saul with the Stock Market Trading Watch List for Tuesday, August 30th, 2011. Let's take a look at the CBOE Volatility Index, aka the VIX. VIX now below the 10-day and the 20 here and headed for a retest of these lows. See if it gets down below 30. Now, I'm not a big believer in using hard levels to pick bullish and bearish on the VIX. Above this is bullish, below this is bearish. But I do look at levels to see whether or not the volatility is extra juiced. Okay, and I'm using 30 as my cutoff, especially lately, because we had a lot of prints in the VIX above 30 here over this last decline, the last several weeks here. So I think if we get below 30 on the VIX, I think you're going to start to see a pretty nice dry up in volatility here. And of course, if it explodes back up like it did here when it popped out to above 30, then that's when things change. But I think it's going to settle down here if the VIX gets below 30. Let's talk about some of the indexes here. The SPY video is up on the site, but what I talked about is how we broke the downtrend line in the 20 EMA here, and we have a measured move up here, 123.13-ish. It could be off by a couple of pennies. It's fine. I don't think we get there in a big push up. I think we grind. Okay, and I think that if we get there too fast, I think there's a better chance for us to roll back down. But I think we grind up there. I think we grind this week into Labor Day. I think we could probably hit this by Labor Day, but we'll see. And then we have the 50-day coming down as well. So I wouldn't be surprised if we see some sideways consolidation or some low-range action and then a grind up to this level and above, hitting into the 50-day moving average. If it grinds long enough, obviously, then the 50-day will come down, and there could be some confluence there. But overall, I think this is a corrective pattern. A lot of people are jumping right back on the bull wagon. Okay, we're back in a bull market. I mean, the volume is not telling us that. And the price action, I mean, yeah, we have this little double bottom, all's well, we're running here. So, I mean, look, if we get back above the 200-day moving average, then the NASDAQ, I'll switch sides, right? I mean, the 200-day is my bull-bear barometer here, but, I mean, we're just not seeing the kind of volume that says, okay, all is well. You know, I don't think we got a big enough flush out on this push down. I know a lot of people write me and go, what are you, crazy? We had the biggest volume in years or whatever it was, but just didn't look climatic to me. And then we double bottomed with lighter volume, and now we're on the bounce here. But, you know, until we take out that 200-day, I'm going to stay leaning towards the bear side. All right, the Russell broke out of this consolidation we had marked off. And by the way, when I mean leaning to the bear side, it doesn't mean I'm going to be coming in looking for shorts every single day. You know, this corrective pattern could go on for a little bit here, like I've been saying. All right, here's the Dow. Ooh, okay, where are you? Dow, there you go. So Dow's coming up too in this ABC-like move. Have a 50-day here as well, 200-day. So let's see. I mean, if we zoom right back over the 200-day moving averages, then I'll be wrong. But right now, I'm not sitting here going, get short, get short, get short. No, no way. Let this corrective pattern fizzle out. And if it doesn't fizzle out and winds up turning into an impulsive pattern, we wind up going higher, well, so be it. Okay? That's what confirmation is all about. That's what waiting for opportunity is. Not just sitting there and going, okay, we're up a couple of days, it's time to go back down. Here's the SOX. Confirm if it breaks above that, it would confirm a small double bottom. The banks. Okay. Banks trying to get above the Warren Buffett Bank of America high. All right. Let's look at Bank of America while we're at it. Okay, might as well go back and forth here. There's that high. You got the 50-day right there. Brokers. Also trying, they got above the 20 EMA, see if they could take out this ledge here. Goldman, of course, the big name there, 20 EMA. Held the first time. Will it hold the second? Will it hold the second time when it's tested? Look at volume. But 2 days up, just really lame. Okay. Cyclicals, 20 EMA, oil, OIH, 20 EMA, watch that for resistance. Gold, we'll use the GLD for now. Pause day, SLV, also a pause day, sets up, does it set up a mini coil? Let's see. No, not quite a mini coil, but a different type of coil, I guess. Not a textbook mini coil, but it's yeah, that would have to be that wouldn't be an inside bar. Okay, sorry, I'm talking to myself a little bit. Yeah, it's a coil, but it's not a textbook mini coil. But we can watch this to see if it breaks one way or the other here. The SLV, Apple, gapped above the line in the sand resistance. Now 393.38. If that gets taken out, it suggests a full retracement up. If not, we run into resistance there. Watch for a pullback and a fill of the gap. Amazon, okay, nice day, back above the 50-day moving average, so back above all the moving averages. Baidu, okay, a little hanging man here, a little doji. Google, still not acting that great. I mean, it was up 2%, but slammed into the 20 EMA here. So watch this. It has to get above that, obviously, and then try to attack that 200-day. So tech is mixed. Okay, potash, push up. Okay, I looked at this on the blog. Push up. Watch this level right here, 59.65-ish, 59.64. If that breaks, looking for a full retracement up. Okay, Riverbed, 20 EMA, and the gap. Okay, filled the gap and hit the 20 EMA. So let's see it. Does it just rip through? The more bullish thing would be a slight pullback that doesn't take out the lows, and then it gathers up some steam, some inertia, and gets through. All right, X, 20 EMA, watch that. RIM, somebody said, hey, you took your eye off RIM. Okay, still going. We marked this off a couple of days ago. It was a beautiful entry there above 27.50. Okay, still has this gap to contend with, but watch the 89 EMA at 34 first, and then watch this at 34.67. That's the gap. So far, looking really nice. Ford, somebody wanted me to look at. Okay, 20 EMA. A lot of these stocks look the same. They look the same as the indexes and as the bigger name tech. So let's see what happens here. I mean, I'm going to watch to see if we just keep going higher or if we grind it out. Like I said, I think we grind it out. The SPY or the S&P 500, whatever you want to use, is definitely leading here as opposed to the, you can see here, same kind of deal, as opposed to the Russell. Right? I had a real nice day led today, but as far as where it is from the pullback is what I mean. It's the S&P is taking the lead here. But a couple of good days, and the NASDAQ 100 and the Russell could catch up. All right, and could take over here. Especially want to keep an eye on the NASDAQ 100 here. See if it gets back over that 200-day. I mean, I thought this move here, when it got above the June lows, I thought, hey, maybe that's going to signal a further push. But nope, now it's back up above them again. All right, so that's it. Have a great trading day on Tuesday. Talk to everybody again on Wednesday. See if the bulls can continue forward.